All right. Hey, everybody. This is Bob Gavlak. I'm here with Zach Leadham and Jed Kinderknecht. And we wanted to just put this together here, do a quick recording. Well, maybe not quick, but we're going to do a recording and talk a little bit about all the recent legislation, the $2 trillion that was put into the economy following, all the pandemic and coronavirus stuff that's going on. So Jed is a trusted and super smart, talented CPA here in the,
Oh,
the Columbus
go
area.
on, go on.
Yeah, I know, right? I should really lay it out, but it's true. But I don't even have to introduce him because as you listen to him talk, I think it's going to be really helpful. And we're just really excited to have him be a part of this. And then Zach is a member of the team here as well, a certified financial planner. And really just want to put this together to just talk through what kinds of questions are being asked, what we're seeing in the CARES Act and all the different parts of it, and just be able to break it down and understand how to use it. So, Jed, maybe if you can just introduce for us, just super high level, what's going on, what you've learned from all your research, all your time reading through the proposals. And then from there, we'll just kind of ask questions and have a dialogue and just, dive into some of the details here.
Yeah, perfect. So, really the focus of today is going to be around how can businesses continue to operate while being shut down, right?
Mm-hmm.
And so there's a lot of different things that have come out that will allow businesses to continue to, or get some money in some respect to continue to operate and keep their business healthy, at least, or maybe on life support for a bit of time until things get going. And so there are a couple different pieces, and some of it came out with the CARES Act, and some of it is kind of outside the CARES Act. So really, there are three different types of, I'm going to say loans, even though one of them can turn into a grant, but three different types of loans that people can get, and these are all kind of through the SBA. These are kind of special to the coronavirus. Okay, so there's plenty of other loans, but plenty of lending that I'm not talking about normal lending. This is very, very specific to this. Okay, and so they're the economic injury disaster loans, or the EIDL loans. All right, and so these are done through the SBA. These are not a part of the CARES Act. These are kind of outside of that. If your state has been designated a federal disaster area, state by state, that's important. But if it has, then these are available to you, and you can talk to an SBA lender about these. And so the difference, or one of the things with this is that it is a normal SBA loan in that it's a loan. You can get up to, I think it's $2 million. Interest rate is around 3.75% or so. Structure them for 30 years. There is guarantee, right? So you have to personally guarantee it, and they do look at your feasibility to pay and that sort of thing. And so you can do that through a lender, or you can actually go right through the SBA. If you go to the SBA's website and go to disaster, you can actually start that application right there online.
Okay, and just let me stop right there because I just have a question clarification. So this is not through the CARES. This is just a separate.
This has actually been available for the last. Again, it depends on your state, but this has been available for the last month or so.
Okay.
So
gotcha.
Pre-CARES Act, this was something that they already put in place, that if your state is considered a federal disaster, that the SBA opens up this program to allow you to get loans.
Okay. And so is everybody considered, like, because this is a national crisis, is everybody basically considered to have an emergency, or?
No. So that if you notice, I have two standing things that I watch daily right now, and that's one, I'm in Ohio, and so I watch at 2 o'clock. I watch our Governor DeWine talk, and then usually at around 5 o'clock is when there is a White House press conference, and I watch both of those and have been for the last few weeks. So my point is that if you hear President Trump talk about, I've approved this state as a federal disaster area, that's kind of what he's getting at. Every state has to apply. So he's like, we've got the applications for this one, and we'll go through them as fast as we can. And so no, you cannot make that assumption. Okay, but your state should know, right? So it's a very state by state specific thing. Could it be that at the end of this that we all would? Yes, but I would not know enough to know who is and who isn't currently. I do know that Ohio is, and again, that's where I'm based, and that's where the majority of my small businesses are based.
Okay, cool. So sorry to kind of
No,
step
that's
in
okay.
there, but you
The
can,
other thing
yeah.
is that these funds can be used for payroll expenses, fixed debts, accounts payable, other expenses. I mean, basically just, all normal operations. Okay.
Okay,
So
cool.
then there is so that's the one loan. Then there's another loan. It's called an SBA Traditional 7A. Okay. And the purpose of this is to get money to you very quickly. Now, technically, these are unrelated to COVID-19. Okay. So these are kind of always been there, but it's to refinance debt, refinance real estate and that sort of thing. That's more of your traditional SBA loan. Okay. Those are up to $5 million. The SBA market rates change. The structure on those are 25 years. There's no forgiveness or anything like that. And again, a personal guarantee, and they're going to go through your ability to pay it back and that kind of stuff. That's the normal, longer SBA process that you're used to, right? There's fees involved, and there's a lot of process, and it takes a good bit of time. Okay, so that's
Okay.
the SBA Traditional 7A loan.
Now, Jed, real quick, the two loans you've just discussed, do you go through the same website to apply for both of these?
It's a good question. I believe the SBA Traditional 7A loan is through a bank. Okay, you usually have to go through an SBA approved lender. The EIDL loans can be done, I believe, through the bank, but also there is a place that you can apply for those directly on the SBA's website. It's called it's sba.gov/disaster.
Okay. All right. And I heard
Great.
something about like a $10,000 like prepayment or something like
Yeah, it's
that.
like
What
an
do you know about that?
emergency. I think actually that's around that. It's in conjunction with the EIDLs.
Okay.
Okay.
Gotcha.
And so it's just a way to get the money like super quick. It's almost like a fast track just for that first initial infusion.
Gotcha. Okay.
All right. So, and then you've got the new one, the new thing that has come out as of when the president signed it this past Friday.
And what date? So what date would that have been? Depending on when people watch this.
That would have been the 27th.
Okay. Gotcha.
Was the inside the CARES Act. So this is the piece that's inside the CARES Act. There's something called the Paycheck Protection Program. Okay, and so we're kind of coining it PPP loans. Okay, you have to think of these as the purpose is to keep people off of unemployment and employed, but allowing businesses to continue to pay those payrolls while they're shut down or being economically impacted by everything that's going on. Okay. The way the analogy that I'm using is if we have any people that understand racing, okay, in NASCAR, if you have a very big wreck that basically shuts down the entire track, everybody's going to have to pull off to the side and hang out until what time they clean it up. Then when they do the green light or green flag or whatever, they're going to send them back out. While they're sitting there for a time, they're going to let their engines idle. They're going to hang out. So they need gas and they need to maybe do a little bit of maintenance, but they're going to do kind of the minimum thing so that when that green flag goes, they can come out of the gate going. Really, that is the goal of these PPP loans. It is to keep a business's engine running at a low amount so that when things open back up, they can just start back up. A salon can start taking appointments the very next day. A gym can start having people come back the very next day. A restaurant can go right back to serving their community and taking reservations the very next day because the staff is already there. They're already ready to go.
Gotcha. Okay.
And so go ahead.
No, go ahead, Jed.
No, again, the point is to keep these people on payroll. Okay, that is kind of the goal, and that's why it's coined the Paycheck Protection Program. Okay.
And I know that you're probably going to go into this, and I think this is probably relevant to a lot of the loans that are available right now in the SBA and small businesses. But for those people out there listening right now who are not necessarily familiar with the definition of a small business, what's the criteria for that? Who's eligible?
Yeah, no, that's great. So we'll talk about who's eligible for this. So there's a couple different caveats, and so I'm going to talk a little bit on the high level. Just because I don't mention you doesn't mean that you don't necessarily qualify. And again, I'll go ahead and say it. Again, a lot of times states' rules are different with some of the things that we're going to talk about. So you need to be talking to your tax professional and your banker about these things. So things that I might say, literally they could change these rules and change the definitions and that kind of stuff within a matter of hours. So take what I say as a very good starting point, but absolutely have conversations with your tax professional or your banker. That is definitely going to be my recommendation about whether you qualify and what the dollars specifically look like for you, because everybody's situation is different. So, but now back to your question, Zach, is that it's small businesses, nonprofits, veterans organizations with 500 employees or less. Okay. Now, sole proprietors, independent contractors, people that are eligible for that basically qualify for self-employment, they qualify as well. Mm-hmm. The other big one is that people that are underneath a franchise agreement. The 500 employees does not count as a company as a whole. If you're underneath a franchise agreement, they do it by location. So that's really, really, really important for franchise owners, because if I own 50 franchises and between those 50 franchises, I have 500 employees underneath that model, I would not qualify. However, when you look at each location does not have 500 employees, you would qualify underneath that. Okay, so that's the biggest piece. You also have to be in operation at on or before February 15th. So again,
most people should fall into there, right?
Again, somebody that just is like, I want to start a business and pay myself a wage and get the government to pay for it. This is not what we're talking about, right? So you already have to kind of have the been in business. And then you have to make a couple certifications. You have to certify that you've been impacted by COVID-19. And so I'll talk about those here real quick about what exactly you have to certify. You have to certify that the uncertainty of current economic conditions make it necessary to get this loan, to request this loan, to support the ongoing operations, and that the funds will be used to retain workers and maintain payroll or make mortgage payments, lease payments, and utility payments. So you have to self-certify that when you apply. The biggest thing is that, you know, the very first one that says the uncertainty of current economic conditions makes necessary the loan request. I mean, let's be honest, that anybody can say that at this point, in my opinion.
Right.
Pretty much. I would be hard pressed to find a business that would not be able to certify that is the case. So,
did they give any insight into how they're going to follow up on that certification there, or is it just make sure you're making the best case?
I think it's a hand on your heart thing. I think it's a self-certify. I mean, here's the thing: is that even businesses that are still open, if you're a part of the supply chain and one of your pieces slows up their AR, right? Slows up their AP, and you're not getting paid, and slows up your AR. You're in business, but nobody's paying you, so it all just starts flowing downhill really quickly, right? So you don't know, and again, it could be a lag time, whereas some people are maybe getting paid now, but again, depending on how long that chain is, you might be a month out before you start feeling it in the cash flow.
Right.
So
okay. So just to go back and take a step back here. So you mentioned that there's a few qualifications for getting the Paycheck Protection Program put together. So the first one is the self-certifying that you've been impacted in some way, shape, or form. What else is involved in the certification there?
Yeah, the other one is that you have to say that you're going to use this to retain workers, right, and maintain and pay loans and lease payments and utility payments. Because really, again, that's what it's for. It's not for paying a whole bunch of like office supplies or buying new equipment and that kind of stuff. That is not what it's meant for. Now, Can you use those funds for that? I'm not saying you can't. You have to kind of certify that you're going to be using these things for these very specific things, and we'll get to why that's important as we move here. But really, again, this is supposed to take care of payroll costs, rent payments, mortgage payments, utility payments, that sort of stuff.
Okay. So how do you? So then, assuming that you certified for those things, what's the process for going through and getting the Paycheck Protection Program?
Yeah, so the process is fairly vague right now. because again, it's only been a few days. The banks are still waiting on, as far as I know, they're still waiting on good directions from the SBA. And so a lot of the nitty gritty specifics are not currently available to my knowledge. However, again, I'll talk through kind of how it works. These will be administered through banks. Okay, so any SBA, any current bank that is an SBA lender would be able to do these. Okay, so that's why I say, talk to your banker ASAP, as soon as you can. Let them know you're interested in this. Get in line, if you will. Okay.
Okay.
That makes a lot of sense to do that. And so the banks are the one they're going to be administering. Now, the good thing is, again, with this, there's no personal guarantee. They don't need to run a personal financial statement. They don't have to look at the ability for you to be able to actually pay this back. There's no fees. The banks aren't going to, you know what I'm saying? And there's nothing that's going to be normal that's associated with the normal SBA loans. They kind of stripped out a lot of that to make it supposed to be very easy to get these loans. The lenders have the authority to make and approve these PPP loans. There's no additional SBA approval required.
Okay. So it should be pretty quick and streamlined, I would assume.
That's what they say. All right. And so we'll see if it's theory right now, right? So we'll figure out if it's actual here within a couple weeks, I think. But that's good, right? And so those are also good things. So the funds can be used for a variety of qualifying costs. Okay. And so those costs include payroll costs. And let me define what that is. Okay. These would be salaries and wages, payments of cash tips or the equivalent. Okay. So again, big for restaurants. Vacation, parental leave, family or sick leave. So anything that you would have normally paid for, okay? Payments for allowances for dismissals or separation, payments of group health insurance. That's big as well. So that's considered payroll costs, right? Payments of retirement benefits, 401k, matching contributions, and that kind of stuff. Those qualify, okay? Now, here's the piece that is where it's going to get interesting. Payments to sole proprietors or independent contractors. So that's usually not really considered what I would think of as payroll because it's not a W-2. But again, this is being included in this. So payments to independent contractors that have compensation not more than $100,000 in 1 year, prorated for the covered period. Okay, so it's not like, oh, $100,000 in that period. No. It's $100,000. Divided by 52 to give you a weekly, and then however long the covered period is.
Okay.
All right. So let me tell you what's not payroll costs. So again, like I was talking about, any of the compensation for any employee in excess of $100,000. So I just got confirmation today. That doesn't mean if somebody makes $101,000, you can't pay any of their wage with these funds. That's not what it is. It's the above would not qualify as going for these funds. Okay.
Okay. So you could pay. So I'm sorry to cut you off. Just to clarify, right? So if somebody's making, say, $200,000 and you want to protect their paycheck, you can only protect half of their paycheck effectively.
In that you could get the money that you're coming from these loans could be used for because, and again, this gets into why it would, or if and when it would be forgiven. You would be able to use. You'd be able to pay half their salary with these funds, right?
And then you could pay the other half with whatever you have in the bank, or if you wanted to. Or
exactly. Yes, that's the kind of thought process there, right? Or hey, we need to restructure your compensation for a little time. I mean, honestly, I mean that's why it's better than being laid off.
Yeah, for sure.
It's better than being laid off, and so again, not including payroll costs would be household employees. Right, so if you have a nanny or somebody that works in your home that you pay as a W-2 person, which you do have to do at some point in time, this does not count as that. Okay.
Okay.
And then any qualified sick or family leave that you're getting credits for underneath the Family First Corona Response Act, which was another act that was done about what feels like a month ago. It's probably closer to 2 weeks ago. But if you're getting credits for paying for people because they contracted the coronavirus, their family contracted the virus, or they're taking time off and using sick leave, the FEMLA, right, FMLA, to be at home because they closed down schools, and you're getting credit from the government to pay for those wages, you can't double dip.
Okay.
So you can't get both of those. Okay.
Okay.
So that's important. That's important. So that covers payroll costs. Okay. But again, additional things that you can use this money on: healthcare benefits, mortgage interest obligations, rent, utilities, and interest on debt incurred before February 15th. Okay. So basically to kind of keep operations going. And I know a lot of banks out there have kind of pushed off payments and that kind of stuff, which is great. But this would allow you to continue to meet your obligations as far as that goes.
Okay.
So those are the costs that you can use those things for.
Do they have any guidance as far as like what kind of the range of amount that you'll be eligible for? Is there like a minimum or maximum that's going to be available to organizations?
It is, yeah. So there's a maximum that you can take the lesser of $10 million. So that's kind of the all the way at the top max, right?
Okay.
Or basically 2.5 times your average monthly payroll costs. Okay.
Okay.
And again, when it comes into payroll costs, what's included in that? If it's all just W-2, that's really easy, right?
Mm-hmm.
You look at last year or even a bit of time, you divide by 12, easy, right? When you start dealing with independent contractors and self-employed people, well, they're never really not on payroll. So how do they deal with that? Do they take a Schedule C, something from your tax return, and divide by 12? How do they do this? Do they look at the 1099 miscellaneouses that you've issued? And so this is where there's a little bit of an area I have not heard how they're going to do that math.
Okay. Gotcha.
But those should play into that 2.5 times the monthly payroll costs. And so think about it. The reason why they're saying 2.5 times is because and I'm going to get into this here in a minute as far as the amount being that can be forgiven, but the period is 8 weeks. Okay. That's kind of that runway. So if you think about it, 2.5 times a monthly pay, the 2 times is the 8 weeks, and the 0.5 is hopefully there to help you with the rent and that sort of thing, right? So that's where they're doing that 2.5 times that monthly average payroll costs.
Understood.
So not including the rent, not including those things, right? So it's just the payroll costs is how they're going to do that.
Now, you had talked about and this is just trying to connect the dots here. You had talked about the EIDL earlier here, and then we have this PPP. Can you do both? Do you have to pick one or the other? Like, how does that work?
Good question. My understanding, again, there's some gray area around this, okay? My understanding is that you can do both. If you've already applied and received the EIDL, you can actually refinance the portion you plan on using for all of these qualified expenses into a PPP loan. Okay. So, which you should do because the EIDL loan is not forgivable, and a piece of this can be forgivable. Actually, all of it can be forgiven if you use it for the right things. Okay. So I don't think one precludes you from the other, but I do think you have to do something to say, okay, on the PPP, I'm only going to use it this, and the EIDL, I'm going to use it for other things. Okay. Now, like I said, when I read the bill, it's a little gray on that piece. Okay. I know that you can refinance the EIDL, but I don't know if you can run them. I'm not 100% sure if you can run them in tandem. I believe you can, but there's more guidance we need on that.
Gotcha. Okay. Well, thanks. Okay.
And so
you can go ahead, Zach.
No, I think that you were doing a great job clarifying that. I think that the one thing that I'm excited to hear about, and Jed, I think you're about to talk about it, is the whole idea of, why they're doing this in the first place is to incentivize employers to keep their employees so they don't have to, take unemployment, things like that. And I'm assuming as it relates to loan forgiveness and what you're about to get into, or whether they're going to turn it into a grant or just simply forgive the loan, it's going to probably have something to do with their ability to keep employees on. So can you talk a little bit about like how that loan forgiveness is being determined, if at all?
Yep. Yeah. So at a very, very high level, again, this is where I think they're more focused on getting the loans out, and then they're going to figure this other piece out on the back end of this thing, which is always dangerous. But at a high level, the loans will be forgiven if you've spent it on those qualified things: payroll, mortgage, rent, utility, that sort of thing, for an 8-week period. Okay, starting at the origination of the PPP loan. Okay, so when you get approved from the loan, that's your start. 8 weeks from there. Okay.
Gotcha. So your belief is that they'll just look and say, hey, this matches up, and so you're forgiven.
The banks are going to want a lot. They're going to be like, give me payroll records, give me the rent checks, give me independent contractor invoices. You need to give me your utility invoices. They're going to want details. And that's why it's going to be very, very important to get records. And so at the end of the 8-week period, you actually have to apply with the bank to have it forgiven. Okay. And that's when they're going to ask for that kind of stuff. Now, to get to Zach's question, the whole point is to keep employees on payroll. So what they start doing is they look at what's called FTE, which is full-time equivalent. Okay. So they look, because again, this can be working for part-time people as well. So they look at full-time equivalent. So at the beginning of this thing, you had 3 full-time equivalent people, even if it was 5 people, 2 part-time, 2 full-time, something like that. Throughout this, your FTE, if it decreases by the end, or again, there's some math there they got to figure out, the amount that you can have forgiven gets prorated in essence, right? So if you started with 3, let's say you started with 5 and you ended with 3, 2/5 would get prorated. Like, no, you can't. You can't get this forgiven, right?
It just turns into a loan, effectively.
Yes. Anything that's not forgiven turns into a loan. Okay. Interest rates capped at 4%, so it might be a little bit less or whatever, but it's capped at 4%, and it's a 10-year term. 100% guaranteed by the SBA. Good to go. So it's actually, again, even if you don't get it all forgiven, it's a decent loan. It's a decent loan. So
definitely.
So that's the FTE requirement. The other piece is you can't slash salaries. So if you reduce salaries in excess of 25%, that will also then prorate the amount that you're allowed to have forgiven. So and of course the reason why they're doing this is because they want to encourage rehiring people and bringing salaries back to the level that they were. Okay. One of the big questions I get, especially with salons or gyms or restaurants, is, hey, I've already laid off all my staff. Right? We got shut down, and I just laid everybody off because I didn't know what I was going to do. And so, so in those instances, they're not going to get penalized if you bring them all back, right? Or if you bring the FTE back up to what it was, then you're good to go. Or again, if you're okay with some of it not being forgiven, you could do a portion. But my point is that if you go back and rehire all those people and be like, hey, it's good, we're going to pay your wages and that kind of stuff, then you can qualify for this loan. Okay, there's a window and there's some specifics around it. And again, this is where you need to talk to your banker. But just because you went ahead and I have already laid off everybody, don't think that you're out of luck, right? I know it feels probably like it's been 5 months since you've done that. It's really been 2 or 3 weeks. And so there's still time to kind of reverse that, bring everybody back on, apply for one of these loans. And I don't even think you have to bring everybody on and then apply for one of these loans. I think you can apply for one of these loans, and then once you get approved, you just bring people back on and get them back on payroll.
Okay. So now that thought there, you're talking about like gyms as an example. There's a lot of big gyms out there. There are a lot of really small gyms out there. Is there a size of a business that's too small to be eligible for these loans, right? Like if they're
there's no too small, especially even if you have just a one-man shop. I think what you really have to ask yourself, especially as you get smaller, is does it make sense to continue to idle this engine? Or has been so much decrease that I'm really not going to be able to recover? Right? And I know those are hard questions. And there's really no good answers, right? That's just where you have to do a gut check. The worst thing you can do, I would hate for people to try to be hanging on when reality is they're not going to recover, because you're better off probably just letting people go on unemployment. You going on unemployment now as a self-employed person can do, and just calling it a day. But at the same time, we're talking about a shutdown that when it opens back up, it's not like people aren't going to go to the gym. It's not like people aren't going to go to the restaurant. It's not like people aren't going to go get their hair cut. God bless America. We're all going to look like Yetis. So, we're gonna need to go get our haircut, and they need to do these things, right? And so my point is that I really think that it's gonna open back up. And so if we can just keep that engine going for a little bit, that's really what these PPP loans are for.
Gotcha. Okay. No, that's helpful because, sometimes with this, I think a lot of people, they hear these sort of programs that are out there for businesses. They see the bailouts of the super large
Yeah.
companies, and they're like, well, what about us, the small businesses across America that have maybe, 2, 3, 5 employees, right? Is there something that's too small? That's good to hear that there's options there, that this is an option that can be viable. But yeah, I think it's unfortunately people will be making that hard decision, right? Like, is this for me still or not? But that helps to fill that in. So
Yeah. And so a couple things on the loan forgiveness, right? Not taxable. So a lot of times when you have a forgiveness of debt, that becomes income and you've got some taxes. No, not taxable.
interesting.
The other piece is on the piece that is forgiven, if it's the entire thing over those 8-week period, no interest. That is something I just read today. So I do not believe that, my understanding is there's no interest. And so again, if you have a loan, if the loan's after that or the whole thing doesn't get forgiven, the portion that's not forgiven is going to turn into a loan and all that kind of stuff. But even if there was interest, the idea that I can keep my staff on, the people that I've grown this business with, that I want to keep on and continue to pay, and they can continue to put, go to the Kroger's or wherever and get food for their family and that kind of stuff. I can do that and the government's going to pay for it, and it might just cost me a little bit of interest. It's not a bad deal. Not a bad deal.
Yep. So is there a company or is there a circumstance that you can think of for a company that shouldn't apply for this? Like what would you not, like, if you feel that you're like, what just curious.
There's not. Honestly, I can't think of one that wouldn't. If you qualify and you're concerned and about the economic conditions of what's going on and the viability of your business, I don't see a downside. I mean, the downside is that if you don't use it for these qualified things, it turns into a 10-year note at 4%. And so it's not bad with the current.
No, and then they can, and then correct me if I'm wrong here though, Jed, they can then take that and it's effectively a loan and they can use that for, as we come out of this recovery, if they want to hire more people because they've put themselves in a position to grow, or marketing or expansion, or, buying new computers or whatever it might be.
I mean, again, initially you have to certify that your goal was to keep salaries, right? So you have to certify that was the goal, right? But I mean, obviously goals change. Or, hey, listen, I had a staff member who I wanted to keep on who decided they don't want to do this and they want to go on unemployment. Or difficult because then they're quitting and not getting fired, but that's beside the point. My point is that you can't do anything about that. And so in an instance in that, it's like, oh, I borrowed those funds, but now my FTE is down, and so my ability to pay back the loan or get it forgiven is hampered. There's nothing you can do about that. You know what I'm saying? And so you may have had every intention to continue to pay them, right? And so now you've got these extra funds that you borrowed that you could either just pay back and be done with the loan, or you could keep and use for those things that you talked about. And it's at, and it's at a very reasonable rate for a reasonable time.
Gotcha. Okay. All right. That's good. So what else, is there anything else on the Paycheck Protection Program that's important to think about or discuss?
I don't think so. Not currently. Again, I think that the biggest thing is that if any of this seems like something that small business owners want to take advantage of, they need to call their banker. I say that it's like Black Friday right now, right? And the ad has come out and everybody knows what's on sale. You need to get in line. And so, let the banker know, hey, listen, I am highly interested in these, and make sure your records are up to date. You don't have to have filed your tax returns, right? But you should have a P&L that's clean, right? You should go ahead and download your payroll records for all of 2019, as well as January and February. Go ahead and get them. Talk to your payroll provider. Get access to those. Print those out.
Quick question. So if you're a LLC sole business owner, right? Like, and you're not giving yourself a payroll check per se, but you're just kind of taking, how does that get factored in?
That's the unknown, man. I think that they're going to go off of either gross receipts and then maybe a percentage of it, or they may just take your Schedule C for last year, right? Or P&L from last year and take the bottom line and do some math around that. That's my initial thought, but there's no clarification there yet.
Okay. Yeah.
But,
sorry to cut you off.
But I want to make you aware that you are still eligible for these. If you are a single man consultant You are still eligible for these, even though you do not have a quote unquote payroll. But how they're going to figure 2.5 times your monthly payroll, that's where the SBA has got to bring some clarification.
Okay, and I'm sure we'll have some follow up on that too, where we can comment on that. So, so what else outside of? So we talked about the EIDL, we talked about the payroll protection program. What are the big questions that you're getting either from clients or small business owners, or what are the other things that small business owners should really be looking for out of this?
Yeah, absolutely. There's a couple other things in the CARES Act for businesses that I've gotten a couple quick questions about. Not a lot of questions right this very second, because again, everybody is focused on how do I get cash, right, to keep my business open and that sort of thing. But I'll hit some higher level things. One is there will be a new tax credit, okay, employee retention tax credit for employers that were subject to closure due to COVID-19. Okay, so again, this is in addition to the other piece. Okay. And so again, this applies to wages that are paid from March 13th through the end of the year, actually. And again, it's the credits 50% up to the first $10,000 in qualified wages, and so on and so forth. And so this is going to be a tax credit that's going to probably be facilitated through your tax return. Okay, I think that's how they're going to do it. Sometimes with these tax credits, they do them through payroll taxes. But I've not heard that they're going to do that for this, okay? So for eligible employers with 100 or fewer full-time employees, okay? Let me rephrase. For eligible employees with 100 or fewer full-time employees, all the wages qualify. So that's something in key. So the $10,000 is for employers with greater than 100 full-time employees. People that are under 100 full-times, you can do the full amount. And so there's more information on that. And again, this is one of those things where it's not fully baked yet. In other words, we don't know how they're going to do it, what forms they're going to require, and you wouldn't get it until later anyways. This is not going to be a cash infusion now.
Okay. So that's something that'll come up when you're doing your taxes come 2021.
Correct. I believe so.
Okay. And is it just kind of, and I'm just kind of trying to put it in vague terms here, or high level terms, is it basically they're going to look back and see how much of your employees you retained and give you a tax credit based on those? Okay.
And I don't think any of the wages that you got reimbursed or that you got forgiven for this PPP loan, they're probably going to strip those out, right?
Sure.
Again, not going to double dip. But this would be, hey, hopefully you got back on your feet, right? And you continue to keep your wages after that, right?
Okay. Well, and that
because the wages that it's looking at is through the end of the year, not just that quick eight-week period.
Gotcha. So, and I think maybe, and this is just me thinking about this, maybe what they're doing is they're looking at companies that maybe feel like they don't need to take the PPP loan because they haven't been as affected, that they'll still get some benefit out of the bill for continuing to retain their employees.
Potentially.
In the form of a tax credit, is that?
Yeah. And what I mean by potentially is that they haven't really defined it yet, because again, it's for employers subject to closure. So there could be some stipulations around that. So they have not gone down into the details yet.
Okay. All right. Well, that's what they love to do, is be vague.
Well, and trust me, when you read the bill, it's vague in all the right areas.
What is it? 990 pages?
Something like that, man. I only got through that. Just the
slacker
stuff. Yeah, I know, right? So there are, but so additional, you have the ability to actually defer your employer share of Social Security and Medicare payroll taxes. Okay. It's done through the payroll provider, so you need to talk to your payroll provider. Okay. And so again, it's deferring it instead of paying it in 941 and 940 and that kind of stuff. You can defer those things. So if you do your own payroll, you are your payroll provider. However, if you use any of the services are out there, each one is going to handle it differently as far as how they're going to know, do you want to defer and that sort of thing. And so notice it's defer. It's going to get forgiven. These amounts would be due, and let's see, it says that you would pay them. You can pay them off over 2 years, basically. Again, just a way to kick the can down the road and spread it out a little bit to help cash flow in this very, very tough time.
Okay. So, what about? I've heard something. I don't mean to keep interrupting, but I'm trying to come up with things that I've heard. There's something about like losses, like a certain percentage that you can use towards, or
Yeah, you
What
know,
is?
so they did some things on the net operating losses. They kind of
Mhm.
restricted them a little bit. They basically just opened them back up. I wouldn't say to the full amount that they were, but they have opened them up. And so again, if your business has suffered a loss this year, you'll be able to carry that back a number of years to kind of recoup taxes that you paid in the past.
Okay.
Is the high level very, again, the NOL, the net operating loss has been around for a very long time. They put some restrictions on what you were allowed to carry back and that sort of thing, but they basically released relaxed some of those because they know a lot of businesses are going to be operating at a net operating loss this year. And so
Mhm.
they can go back and recoup some of those taxes or roll it forward.
Gotcha. Okay. Thanks. So.
You know, another thing that was inside of this that really has nothing to do with the coronavirus or anything like that, but is that you can actually through the end of 2020, employers can offer up to $5,250 in student loan assistance without the money counting as an employer's and employee's income. So if you've got employees that have student loans and that sort of thing, and you want to incentivize them or maybe give them some sort of bonus and that sort of stuff, you can actually pay, and it's only through from now until the end of the year, up to $5,250 of student loan assistance, basically paying that off, a bit of that off, and it's not income to them, and then the employer doesn't have to pay payroll taxes on it and that kind of stuff. Can still deduct it, but it's not considered income to them, and you don't have to pay payroll taxes on it. Again, it's a nice thing, but it would be one of those things I would, if you are in economic hardship right now, figure out afterwards, right? I mean, again,
Wait until December to think about if you want to do it.
well, I mean, I wouldn't wait till December because you're only going to have that much time, but it could be a nice, again, a bonus to somebody that's really worked their tail off or that sort of thing that you can do. And so that's a nice little add. I know that the student loan has always been it's been a hot topic recently over the years about how much debt is out there. And so I'm hoping personally to see more of this. I think it makes sense. But it's nice to see it included in here because they're still thinking about it, which is good.
Okay.
Now,
so
here's a
what
question
about,
on,
go ahead, Zach.
sorry, and I don't know if this is what you're going to ask or not, but you got a lot of business owners today that are young, they're entrepreneurs. Maybe they haven't taken the time to pay off their own student loans yet. And let's just say maybe one of them is a sole proprietor. They don't have other employees, and they have student loans themselves. Now, technically, I guess they're an employee of their own company. But explain how that would work. Is that something that business owners should consider for their own student loans, or will that be looked at differently?
I think it's going to be looked at differently. I think because I think technically they're not an employee, and so because of that, there are certain restrictions. There's a lot of restrictions that if you're an owner, even if you're like an S corp where you're an employee and an owner, if you're over 2% owner, there are certain provisions that you're not allowed to take advantage of, right? So, for instance, let me give you an example. Companies can have an adoption assistance program, right, where they can help pay for some of the costs to adopt. 2% shareholders or more are not allowed to participate in that. So there are certain things where it's like, yeah, you're an employee, but not really, not because you control the money, you know. And so, unfortunately, I think that this would fall underneath that, and that's why when we were talking about what constitutes payroll costs previously, they're expanding it in that very limited area of the PPP loans. So it's not like it's opening it all up, and self-employed people are going to be considered employees and all that kind of stuff. It's really just underneath that program, and I don't think these student loans would, this provision would qualify for that. But it's like a one or two liner. There's not much in there, so we would need guidance around that. But my gut's going to say it's not going to qualify. This really is for traditional, what you would think is employees.
Gotcha. Okay. So what else, Jed? Anything else you want to touch on for small businesses?
Those are the big things. I mean, again, there was so much in the CARES Act when it comes to individuals and a number of other things in there. But really, these are the ones that people are asking me about the most, and the ones that I think are for right now, that you need if you want to do something now. Now is the time to take advantage of these things. These are the big ones.
Cool. No, I appreciate that. So I think with that, I mean, we can just wrap this up for now. And then I think, Jed, like we mentioned, we're going to try to do some more maybe focused videos, right? That maybe just to dive in a little bit deeper. But I told everybody at the beginning of this, and if everybody watched it from beginning to end, you know, I said at the beginning that Jed was super smart, really good CPA. And I think it's obvious that you've shown that here, Jed. So thanks for taking the time and sharing your insights.
Yeah, it's my pleasure. I appreciate it.
Yeah. So, and then if anybody has any questions or follow-ups, we'll include all of our contact information below here, so you can reach out to us, Jed directly, me directly, Zach. I mean, Jed again is the star of the show here, but want to thank you guys for being a part of this, and you know, we will continue to update people as we get more guidance. But thanks for taking the time.
Yeah, thanks, guys.